So you have a little free time and you want to start a side hustle, but you're not very creative. What is the first thing that you do? Well, you probably start looking into Uber, Shipt, Lyft, or something like that. You can make decent money and the time that you have to put in is pretty flexible. What you may or may not know is how important this type of work can be in regards to your taxes. The first question that most people ask me is how can they lower their taxes? And my first question back to them is whether or not that they are a business owner. And if the answer is no, I usually tell them that there isn't a whole lot that can be done. Now you can put money obviously into a 401k or possibly into an IRA, or you can take advantage of like maybe your health savings account with your employer, but there aren't a ton of options that are going to materially change your situation. The key to having write-offs is owning a business. The reason for this is that you can write off typical personal non-deductible expenses as long as that they are ordinary and necessary in running your business. The terms ordinary and necessary are pretty broad, right? Like you can probably justify just about anything as being ordinary and necessary in the way that you run your business. And I stress that word "you" because what may be ordinary and necessary for me to run my business may not necessarily be ordinary and necessary for the way that you run yours. You may be asking yourself how owning a business is related to gig employment. Gig employees are typically not considered regular employees. They are either statutory employees or contractors. While being classified as these types of employees definitely has its drawbacks, such as not receiving benefits like healthcare or retirement, you do receive a valuable designation and an opportunity. Since you are not an employee, you get the benefit of operating as if you are a sole proprietor as it relates to your taxes. So if you like this video, please subscribe and drop me a comment. I mainly focus on breaking down tax and accounting topics to hopefully help you better understand what's going on in your business or in your personal finances. I don't get into the politics behind the IRS or anything like that. I just cover the law to give it to you as it stands. So you know the basics and you can decide for yourself how you want to move forward. I mentioned earlier about non-deductible personal expenses. These are things that as regular 9-to-5 employees, you would not be able to write off. So an example of this could be like mileage, rent, home office, utilities, and a big one, depreciation. The opportunities are almost endless. That is, if you track your expenses and you can justify them as being ordinary and necessary, and you comply with the tax code. So if your eyes just lit up, you're in the right place. So imagine running a business as a side hustle, earning money, and then completely wiping out all the money with expenses and then not having to pay taxes on it. Or better yet, having so many expenses that you actually offset some of your W-2, which is your job wages. It can be done, but I wouldn't go into it with that mentality because there are rules about whether this would be a bona fide business or if it would actually be something like a hobby. I won't go into that level of detail, but don't go thinking that you can wipe your tax bill away for the rest of your life. That would constitute tax evasion, and you definitely don't want to go down that road. Let's take a quick look at an example of a tax return of a person who has W-2 income, and then we'll look at that same person with W-2 income, and then we'll add on a gig job. So now let's say that you're a business coordinator and you make $50,000 a year as a single person in Sin City, Nevada. If you made that $50,000 and you didn't itemize your deductions, you would end up having a tentative tax bill of around $4,300. That would be based on using the standard deduction and the tax rate associated with earning $37,450. Now let's look at how having gig employment might change your tax situation. We'll assume that you made $10,000 in non-employee compensation for these rides. If you just added this $10,000 to your $50,000, you would obviously pay taxes on this amount, but you would also have to pay self-employment taxes on this since you are not considered an employee. So you would have $60,000 in total income. There would be an adjustment for half of self-employment taxes. I won't go into that level of detail here, but your adjusted gross income would be roughly $59,000. Back off the standard deduction and QBI, which we may cover that in another video, but just know that there's essentially a credit for being in business. And you would have taxable income of about $45,000. This would mean that you would have a tentative tax bill of $5,600, but then there would be an additional $1,400 in taxes, bringing your total tax bill to $7,034. Our tax bill based on $50,000 was $4,300. Now that we have $60,000 with the side hustle, it's up to $7,000, which is $2,700 more when we only made $10,000 more than before. That's a 27% tax rate on that extra $10K. But don't fret, because all we did was just add the $10,000. We didn't factor in all expenses that were ordinary and necessary in running the business. We're going to go ahead and start with the home office. So we'll use the simplified method and do $5 per square foot. Let's say we have a 20 by 15 foot office in our 1,500 square foot apartment or house. And we're going to do $5 per square feet for that 300 square feet that we're using for our business. So that would give us $1,500. You can actually go through the process of doing actuals, but just know that there are a lot more steps that come into it. There's depreciation recapture, and it's a bit more complicated just across the board, but you can do it nonetheless. Let's say we used our cell phone phone, which we pay for $100 per month. And then we'll say that we use, our cell phone 25% of the time. So that usage for the year would be $300. Let's do our vehicle mileage. So for 2021, 6,000 miles at 56 cents per mile is going to be $3,360. Let's say we had parking and tolls at $100 each, and then we'll just round it out and say that we had some accounting fees for $150. So that $10,000 that we previously recognized has been dropped down to just under $4,500. So now what that does for our total tax bill is we have $4,700 in federal income tax, and then we have another $634 in self-employment taxes. That brings our total tax liability down to just under $5,400. Now that's a far cry from the $7,000 that we previously recognized, and that's because we took advantage of expenses. You can be a little bit more aggressive, and instead of taking the simplified method, take the actual expenses as well as taking the actual vehicle expenses instead of the standard mileage rate, so that you can maximize your tax position. And in fact, you may end up maximizing it so much that you wipe out all of your gig income on paper, and then you actually reduce some of your W-2 wages to help save on federal income taxes, and then obviously you would end up having to wipe out all of your self-employment income. Well, I hope that makes sense. I hope that helped you out. If you have any questions, drop them in the comments, and I'll see you in the next video.